It's a painful lesson to learn when a tenant leaves. Trying to replace it and the income loss is rough. I figure if I'm going to spend a lot of time and energy and effort and money on buying investments, why not just go big?
Welcome, my fellow Flowmasters, to another episode of the Cash Flow Authority podcast. I'm your host, Chris Jansen, founder of the Flow Authority, and this show is for high-performing professionals who did everything right: the degree, the career, and the income, but you still feel like there's another level waiting. Here we explore how real estate can become that next challenge worth building so that you can take ownership of your future and create a life by design. And today, we're joined by a very special guest, a good friend of mine, Mr. Devan Dorzok. And Devin is an associate advisor at NAI Pfefferle, focusing on commercial real estate investment opportunities in the Milwaukee and Fox Valley markets in Wisconsin. He works with investors, business owners, and developers across the Midwest and previously gained operational experience with CBRE and Harley-Davidson. Devin is a veteran of the United States Marine Corps as well, fellow brother in arms to myself. We didn't serve together, but both Marines nonetheless. So welcome, Devin. Glad to have you on the show.
Awesome. Thanks, Chris. I'm glad to be here. I appreciate you inviting me and I look forward to it.
Awesome. So yeah, let's get right in. I like to start by just talking about your journey. Maybe just tell us a little bit about how your path led from the Marine Corps into real estate, commercial real estate, and in particular, the investment side of the industry.
Yeah, happy to share. So I started out in the Marine Corps. I joined when I was 17 and wasn't really sure what I wanted to do. So I spent just shy of 6 years in an intelligence industry in the Marine Corps and realized it really wasn't what I wanted to do. Towards the end of my contract and about 6 months after, I stumbled across a little known book called Rich Dad Poor Dad. Many
Hmm.
people I'm sure know Robert Kiyosaki. He was the one who sparked my initial interest in real estate investing and understanding how it could build wealth beyond just working a job. Growing up, I never really learned financials or understanding what money is or how to make money work for you. So this really being my first exposure to it, it made it really interesting, really shiny and bright and attractive. I immediately jumped in and made the rookie mistake of buying a property. So I used my VA loan and bought a triplex and lucked out. I got fairly lucky with tenants in the property. It just happened to work out. But it made me realize really quickly I have no idea what I'm doing. I spent better part of 3.5 years learning everything I could, reading books, reading articles, studying and listening to podcasts, everything from Robert Kiyosaki, Grant Cardone's stuff where we met, and really just developing my sophistication level. How
Very
that led
good.
me to commercial real estate, I realized dealing with the triplex that it's a painful lesson to learn when a tenant leaves. Trying to replace it and the income loss is rough. I figure if I'm going to spend a lot of time and energy and effort and money on buying investments, why not just go big? So after my long stint of education and studying, I just went after a 96 unit apartment building. Had it under contract, worked with the sellers to do seller financing. It ended up falling through, but it was an invaluable lesson that you don't need to have millions of dollars in the bank to have access to larger properties if you're creative about it. That
Mm-hmm.
experience led me to meet the current manager of NAI Pfefferle, Wally Sawhoff. We met at a networking event and social event for real estate from CarW, hit it off really well, and he just invited me out to a coffee. Met with him, and he said, "Hey, I like what you're doing. I think you have great drive, and I think this is a really great situation for you.
Yeah.
Let me talk to you a little bit more about what we do at my firm and how I think it might be a good opportunity for you." Wanting to get in the commercial side myself, learning more about the brokerage and the brokerage side of the business and industry really interested me. It's a great way to build income, to develop more capital to invest with, and to get a broader access to the market itself. So that's where I'm at today. I started there, probably about 6 months ago now. coming up on the 6 month mark here, and it's been fun. I've started working on some pretty large deals already, a couple hotels
Mm-hmm.
and some large portfolio complexes. And I am trying to revive that 96 unit apartment building with a partner of mine,
Mm-hmm.
owns a property management company. We're going to be taking a look at it and see if we can't revive that project again.
Nice. Nice. It's a long story, but there's a lot of cool elements to it. So, yeah, it's always interesting to hear people's story and how they got to where they were. Because I know when we first started talking, like a lot of that happened while you were, because Devin's a client of mine. So, a lot of this happened while you were undergoing the Cash Flow Accelerator program. And I did meet Devin at the 10X Real Estate, I think it was 10X Real Estate Summit in Scottsdale. So we met there. Actually, both my current clients I met at 10X events. So that's pretty cool. But so I'm actually curious then, since you mentioned Robert Kiyosaki, you mentioned Grant Cardone, two kind of gurus in the industry, and then you took my course. So being a client of mine, I have to ask, how does working with, I would call myself a smaller guy compared to Grant Cardone or Robert Kiyosaki. So how has your
Sure.
experience been working with a smaller guy, a more personable guy that you can directly talk to and engage with on a weekly basis versus, say,
Yeah,
one of the gurus? Because I know they have their programs too.
certainly. It's definitely more cost affordable for people just starting out and building up their portfolios. But it's also a lot nicer because, not to say that you don't know what you're doing, but you don't have that guru status yet. So
Yeah.
you have the knowledge, you have the skills, you have the experience, but you still have the humility and the down to earth ability to learn alongside of us while teaching and
Mm-hmm.
engage and interact and still meet people at their level and not just, okay, here you go. I don't have time for one individual person, go, which is
Right.
nice. It allows you to have some personability and build that relationship while still asking questions and continuing your education.
Nice. Well, I appreciate that, Devin. So let me ask you this. How is your experience in the Marine Corps? And I'm really curious because, like I said, I'm a Marine Corps veteran too. So I have my reasons for myself, but curious for you. How has your experience in the Marine Corps shaped the way you approach business leadership and decision making in real estate, both as an investor and as a broker?
Definitely. My biggest takeaway from my experience in the Marine Corps would probably be the ability to discipline myself. A lot of the things they teach you are centered around discipline, self-efficacy, and building yourself up and building up the people around you. So I think a lot of that helps in just having the drive and having the natural curiosity and the willingness to try things that might fail because of that environment. Because they teach you that it's okay to fail as long as you do it, you fail quick, you fail, and you keep trying. If you keep going at it, eventually you succeed and eventually you get better. And then you can teach those people who follow you how to do it the right way the first time. And
Definitely.
I think that's played a huge role in my, especially my first year of brokering being semi-successful already,
Yeah.
and as an investor here, pursuing larger deals.
Definitely. I can relate to that on the discipline side. Although I think for me, I've been so far. I got out of the Marine Corps in 2012. So it's, I forget, I remember when you got out, but that was 14 years
Yeah,
ago. For me, it's, I've had to rebuild some of that discipline. And a lot of the stuff in
sure.
the Marine Corps the discipline in the Marine Corps for me was more, I was afraid of the consequences that are because of other people, my sergeants and corporals and
Yep.
things. And then I got out and it's, oh, I can do whatever I want now. I can grow my beard. I can grow my hair. I can blah, 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 do whatever. So I've
Yeah.
actually had to revisit that discipline but it definitely helped. And for me, what I learned is for me, it was like the structure. I know that in the Marine Corps, they have a lot of structure. So I've learned, and I don't know if it's because of the Marine Corps or just maybe just how my brain's wired, but having structure in place with systems and things like that really has helped me thrive and regain that discipline.
Yeah, I'd 100% agree. It's really hard to get stuff done without systems. It's been about 4 years since I was in now, the men's civilian side, so not quite as long, but I understand that sentiment. When I first got out, I was still really new into the real estate world, so I needed to make money, needed to get a job, so I started as a W-2 as a building manager for Harley-Davidson and
Hmm.
CBRE at the time. So I figured if I'm going to be in real estate, I should probably know how to fix stuff, how to repair stuff, proper procedure and code and things like that. And I worked there for about a year. And the thing I realized is it's not that pertinent to most of what we're going to be doing. It's great to know and it's useful, especially in a
Yeah.
pinch, but it's not that realistically useful information. I met some really fantastic people and I cherish those relationships and I still leverage them to this day. But the skills I got there would not have set me up for success as a real estate
Right.
investor.
Yeah. And this kind of leads into the next question, right? So systems, having systems, so learning through that experience with Harley Davidson, CBRE, how to do it yourself. But when you think about real estate, a lot of people think about real estate that way. They're like, oh, I'm just going to buy this triplex, like you said, right? I'm going to fix it up myself and I'm going to manage it myself and I'm going to do everything myself and I'm going to do it, bootstrap myself up. And you can get started that way, surely. But that's not how you scale, right? That's not how you scale. That's how you do it if it's more like a hobby. You're treating it like a hobby, leading to this next question of treating real estate as a business. So many people view real estate just that I'm just going to buy and sell property, and that's it. It's passive. It's passive. But if you're doing this as the investor, now you're not doing this as a limited partner. It's not passive. It's active. And so, what does it really mean to build a business around real estate investing? How do you treat real estate like a business and not a hobby?
Yeah, happy to answer that. And I'm going to put my business management degree to use here. It is a business. It's just a business that involves a house. It's no different than a retail business, an office building, a manufacturer. You're just selling a different product. You're selling a space to live in. You're selling that service of a roof over somebody's head. So
Hmm.
don't think of it like you bought a home and you're going to live there and this is just your property and you do whatever you want with it. It's a business as in you have income, you have revenue, you have expenses, you have operating costs, you have operational procedures, you have standard operating agreements, you have legal and licensing. You have to incorporate, you have to protect yourself and have contracts and leases. There's no real difference between what most people think of as a business and real estate. It's
Hmm.
just your product is different. So I
Yeah.
know many business owners that started in traditional business, commerce, manufacturing, whatever, and found that everything they did there directly translated as
Right.
they started transitioning into the real estate industry. So when you think about buying real estate and you think about investing in real estate, you're investing in a business. You're buying cash flow. You're spending money to make money. If you
Hmm.
can't look at it like that, it's going to burn you, whether
Hmm.
you like it or not. And may not be today, might not be tomorrow, but at some point, it's gonna come back to bite you.
For sure. Yeah, I look at this. I'm a 10x business coach. Grant Cardone has this wheel, the business, we just call it the wheel, but it's like the business system or the
Cycle.
sales cycle, right? And you go through the whole cycle and all those elements, having an idea, promoting, marketing the idea, advertising, generating leads, sales, and then scaling. It's all managing the sales and the scaling. It's all part of any business, including real estate. Yeah, like you said,
Hmm.
it's just what you're selling. Whether it's first you're negotiating the deal, your offer, you're selling your offer to the seller, right? And then when you get the deal and you close the deal, then you've got to sell the spaces to tenants. So that's another sales, right? If you're raising capital, that's the entire business cycle all in itself, the entire sales cycle. So yeah, it's very intricate. It's just, I would say, a simplified business model. You don't have to be quite an expert at some other, you have to be in some other businesses, right? If you're in the restaurant industry,
Certainly.
you got to understand
Yeah.
restaurants. You got to understand real estate, but it's a lot easier, I feel, to understand tenants and apartment buildings than it is to understand the intricacies of some brick and mortar business, for example.
Yeah. Definitely. To simplify it in that way, definitely it's easier to understand. I think you can translate it where in a traditional business, you're understanding economy, supply and demand, market share and operations, target audience, and things like that. Those get replaced with rental income, marketability, location, size, quality, tenant target.
Mm-hmm.
So they're a little bit less complex because they don't have as many rules and responsibilities around them because you don't have to learn 35 different economies. You have to learn one market that you're operating in and okay, what are the numbers for that? If you know that, you know the rest.
Mm-hmm.
Where in a business, you could trade with anyone almost anywhere nowadays with technology. So it requires you to understand more markets, more economies, more details about trade. So yeah, I would say it's definitely an easier business. The hard part is getting started. And
Yeah.
it's usually not because of money, it's mindset. It's your thought process and
Right.
what you're willing to do and go for.
Yeah, because if you want money for real estate, there's a lot of lenders, a lot of banks out there. Happily, they're giving lots of money out to investors. And at the end of the day, a lot of times it just comes down to partnering with the right people. Okay, so you're in the commercial side. So a lot of people are more familiar with the residential side, the single family, duplexes, things like that. What are some key differences between the two when you're looking at stepping into commercial real estate opportunities? How do you look at it? How is that different than the residential side of things?
Yeah, the obvious big difference is size. The properties you're working with are a lot larger. They require a lot more capital and a little bit more sophistication. The biggest difference is your lending practices. A typical
Mm-hmm.
conventional loan for a single family to a four unit is going to have different underwriting requirements, different operating requirements for lenders than
Mm-hmm.
even like a six-unit property. Not a huge difference, but the legalities and the lending requirements are completely different and a lot more strict once you get onto the commercial side. You can do a
Mm-hmm.
lot more. There's a lot more options, but they're a lot more strict in their lending practices because it's such a large amount of capital involved, it's a lot more risk for them. Some identifiers for a deal depends on what class of commercial property you're looking for. But the biggest thing that's going to matter is what property type are you looking for? Is it multifamily, office, industrial, retail? What market are you trying to either acquire in, develop in, or sell in? And what are the demographics of that market? What's the foot traffic like? What's the average median income? What is the price per capita? What's the cost per square foot? What's the trading values at? What are the costs to build compared to market analysis and income approach analysis? What are you going to get for a triple net lease? Are you going to get a triple net lease? Are you maybe only going to get a gross or a modified lease? And that'll determine whether a deal is successful or not. Without getting too much into the weeds on leases, triple net is typically the best you'll find, excluding master lease, which you really don't find in many industries except for special needs and like adult care type things where they have really strict requirements for buildings and locations.
Interesting. Interesting. And do you have a preferred within all those areas? Do you have a preference? Do you like multifamily or do you like something else like office space or retail? What do you prefer?
Yeah, myself right now, I prefer multifamily. However, I've been doing a lot more research into self-storage spaces.
Oh,
I think they're fairly interesting,
yeah.
and over the next couple of years, I plan to make my way out to North Carolina at some point.
Oh,
Start
nice.
get some stuff established, more established up here, and then start branching out down there and open a branch firm as well. But I'd like to develop self-storage out there as well. I think it's an interesting subclass of commercial property that has its own niches and markets that are not always served very well, but can
Hmm.
have really good returns if you do your
Yeah.
research.
Yeah. An engineer. You're talking to him. So if you need an engineer for the site development, I know in Wisconsin actually, I know someone who develops storage units. I think that they just come in with the storage, like they just build the storage units. Not that you have to prepare the site itself. That's an option too in Wisconsin. Let me know if you need that contact. But
I will
yeah,
see.
I haven't really delved into storage, so I'm not going to pretend to be any sort of expert on that. But
Sure.
I've heard great things, and it seems like a very low overhead type of option. You don't have as much issues I don't think, as you do with leased
That
unit with tenants and stuff like you have with multifamily.
you're dealing with people either way, so you run into the
Yeah.
same issues.
No
How do they treat
toilets,
it?
no
No
plumbing,
toilets, that's
right?
for sure.
Yeah.
But it definitely depends on your market. Your market is the biggest factor in how that goes and how you operate. If you have a market where your costs are low, your quality is low, your tenants suck, they're going to treat your space like crap, whether it's multifamily, office, self-storage. So like any other commercial side, it, where you are and who you put in there is makes all the difference.
Yeah, sure.
So you have potential for a lot of overhead and a lot of headache with it, but you also have potential for very little. And if you
Yeah.
build the right systems in place too, you can automate a lot of stuff with that, where you generally don't have to have contact with every tenant
Hmm.
regularly,
Hmm.
which is very nice.
Yeah, definitely. Awesome, man. Excited to see where you take those ideas.
Like, yeah.
Okay, so you work with investors, business owners, and developers. Makes sense. And across the Midwest right now, what are you seeing would be considered the biggest opportunities in the Milwaukee and Fox Valley markets?
Yeah, now that office is starting to make a comeback with COVID wrapping up, we're seeing some improvement in office absorption and square foot rates. It's not up to where it used to be, but it seems to be steadily improving over the last year. So there is potential for like put, buying low, renting out higher over the next 2 years. The
Hmm.
downside is the vacancy is still very high. So it's a little bit higher risk, but there's potential for higher reward. The other side to that is retail. We're seeing a lot of developments, a lot of new spaces, a lot of new apartment buildings coming up in like the western side and the northern sides. Like
Hmm.
Northridge Mall has been under redevelopment for the last 2.5 years to try and gentrify and reintroduce commerce to the area, just bring life back to that part of the city. So retail is making a pretty big comeback as well. Numbers are up pretty much across the board, and then vacancies being down, let's say 5 or 6% over the last 2 quarters, which is nice to see.
Nice, nice. So it sounds like there are some opportunities out there. Somebody, even somebody
Definitely.
new who wants to get into investing, what would you say to them? Should they be afraid, or should they? Are there plenty of opportunities out there for people to get started?
No, I would never say be afraid. It's a very competitive market, so the prepared and educated investor is the one that's going to succeed, is what
Hmm.
I'm going to say on that. If you jump into it thinking you're going to buy a 3 unit retail mini strip in the South Side and you think you're going to make 10 grand a month, you're not. You're just not. Setting good expectations, understanding the market, and really doing your due diligence on what property type you're going after, what your target market is, what your price range is, and how you're going to operate it is going to make the difference between whether you succeed or fail. So there's plenty of opportunity and there's plenty of value coming into Wisconsin, especially Milwaukee, from out of
Hmm.
state investors and even some foreign investors. Access to capital is huge out here right now. So there's opportunity aplenty. You just can't rush into it. There's a lot of change happening in the real estate market as of the last year, not just here in Milwaukee, but pretty much across the board. That's changing things up for how people invest in real estate. So being ahead of that curve will give you a huge advantage.
Nice, nice. Okay. And then thinking toward the future, for someone looking to again enter the commercial real estate space today, what advice would you give them to start building a strong foundation?
Mm, I would say for your first one, don't do it by yourself. Learn more about the market, understand the education, but assuming you have a very good foundation educationally, having access to multiple sources of credit and capital will be very important. Being able to be semi-liquid with the property, having some reserves, and honestly, either work with someone who's involved in a commercial sector or work with someone who is an advisor like myself or some of the other associates at my firm. Obviously, no one likes paying a commission, but when you actually break down the opportunity cost and the potential that you're going to lose, you end up saving a lot more money paying a commission versus trying to do it yourself. I've had plenty of conversations like that with clients of mine where you break down the numbers, and to pay my commission at 6%, they're actually saving hundreds of thousands of dollars.
Nice. And look, Devin's a hard worker. Okay, he's out there. He's in CoStar, and he's looking at the area, and he's trying to find all the deals, and he's calling people off market, and he's doing the hard work. It's the work that like I don't want to do, and a lot of people don't really. When you get into real estate, it's like you're not excited to make cold calls, right? But Devin's out there doing it because he's trying to find deals for his clients. So if you're in that market, and he seems pretty flexible, he says Milwaukee and Fox Valley, but if you're anywhere in Wisconsin, if he can't do it, I'm sure. Yeah, I'm sure he could guide you to somebody who could if he can't. But yeah, reach out. So with that, before we kind of wrap things up, how do people get connected with you? Where can they find you?
Yeah, definitely. LinkedIn, Facebook, Instagram, and if you're ever on Facebook or otherwise, Aspire Milwaukee as well. It's a startup that myself and a group of others are building out to help young and sophisticated investors get into deals, understand deals better, and just have a community to be involved with in the Milwaukee and greater area surrounding. So yeah, otherwise we have an office in New Berlin. That's where I'm located at. It's 2725 South Moreland. If anyone's interested, you're welcome to stop by the office anytime we're open. And my contact information is on our website at naipfefferle.com.
Awesome. And you're on social media and all that too? Any Instagram, Facebook, you're in all those places?
Correct. Yep. LinkedIn, Instagram, Facebook. I'm on all of them. Search my first and last name. I'll be the only one that shows up.
Yes.
I got a pretty weird
Unique
last
name.
name, so it makes it easy.
All right. All right. Awesome. Hey, thanks so much, Devin, for your time tonight. I really appreciate it.
Yeah, thanks for having me out, Chris, and I appreciate you giving me the opportunity to talk and share some more with the real estate world.
You bet. You bet. All right. Well, until next time, Flow Masters, thanks for tuning in. And I mentioned this before, but we've got our new cohort coming up. So message me if you want to join and be a part of that. If you want to get into real estate investing, I serve all 50 states. It's all virtual. And so we'll teach you from how to find the deal, fund the deal, get into the deal, close the deal, execute, and then exit the deal, start to finish, single family, multifamily. And then on the other side, I'm also now offering health coaching as a service. 9 out of 10 people have metabolic dysfunction in America. And so if you struggle with anything from brain fog to low energy, you're struggling with obesity, trying to shed some stubborn fat. I'm on a metabolic reset myself right now, down 8.4 pounds in the first 2 weeks. So it works wonders. While I was 50 pounds my initial time on this, reach out to me, because even if you're here just for real estate, what I realized is if I want to best serve my clients, if I want to go out and find more deals, I got to have the energy to do that. And that's where I've been struggling. Getting healthy definitely helps. Devin's a health freak over here, so he can vouch for that too, right? It's a lot of entrepreneurs get into health. And so don't let that suffer because you're trying to leverage financial benefits over here. You got to pay attention to both of those things. Grant Cardone, he's got 10X Health. He's a health maniac as well. All the gurus are doing it. Reach out for that and we can help you out. So thanks for tuning in. Thank you, Devin. Appreciate your time, my man.
Thanks for having me, Chris.
Thanks for tuning in to this episode of the Cash Flow Authority podcast. We hope the insights shared today help you take the next step toward optimizing your finances and building sustainable wealth. If you enjoyed this conversation, please take a moment to subscribe on your favorite podcast platform and leave us a review. It helps other entrepreneurs and investors discover the show. And don't forget to catch the next episode for more insights. Until then, keep mastering your cash flow.